Hi and good evening, traders. 2nd of September 2021. It's a Thursday evening. What slowdown? With yesterday's close, I was expecting that the index would prefer to consolidate. And in today's trade, it did dip below yesterday's low just to bounce back with another 150 points on a weekly basis with just one more day to go. We are up close to 530 points, 3% up, 17K scaled and held quite comfortably. We are now at 17,247, close to that 250 mark. This is the NSE indices. Most of the sectors participated in today's move, and IT, the one which has been showing exceptional relative strength, picks up momentum thanks to TCS. FMCG thanks to Hindustan Unilever. Real estate thanks to Godrej Properties, DLF and the others. Small and mid caps are continuing their party. Pharmaceutical picks up a little bit of momentum, which is not bad considering the fact that it has been underperforming over the last 2-3 months now. Now let's come back to the Nifty. A sign of a strong uptrend is the previous lows are not breached. Now today's low at 17,072 was slightly lower than 17,083 of yesterday. So 17,050, or we can just take the round number 17K as the short term support for the index. Of course, a breach of today's low will be the first sign. If we take a look at the 75-minute time frame and look into the intraday charts, let me get this right. There you go. So now what we will see, what we'll start to observe is it will start to create a bit of divergences, a price momentum divergence on the daily chart, on the intraday charts of the index will start to pop up. This is very evident on the RSI short term. I'm using a 3-period RSI and a 9-period RSI. So yes, these divergences will pop up. These divergences will mean that the index will either consolidate or correct. In either case, we can probably expect a range bound behavior of price. You should not change the overall view that the index is in a strong uptrend, and our expectation and view should be positive. We should not go contrarian just because there is a negative divergence on the intraday charts. Is not good enough. Bank Nifty, the PSU banks are definitely not doing good. It's the private sector banks which are doing well. Now, a good thing about the Bank Nifty is it took out this range. It was a breakout. It consolidated for a day and then it has picked up momentum. Index will now inch forward towards a new life high for itself. The Nifty has outperformed the Bank Nifty by quite a bit of margin, and the Bank Nifty will definitely do a catch-up game. Stick to the private sector banks, please. ICICI Bank, Axis, HDFC Bank and Kotak. If the Bank Nifty fails to pick up momentum and it is pulled down, then it will be the PSU banks, and SBI can play an important role in that on the downside probably the next week. We will keep a close look at that. Now, there is no doubt that we are in a strong bull market. The underlying momentum and strength is definitely there. So I'll repeat once more, not to go contrarian short in the index or in the market. It's always better to wait out for the first leg of the fall, let it shape up, and then we might look to participate in the second leg. But it will be close to suicidal to try and attempt to pick the top and short a rising market. In terms of the sectors, FMCG, consumer durables, has picked up excellent momentum. But within this FMCG space, and I primarily have all the futures contracts here, it is ITC that I would like to talk about a little bit. Now, I'm not too hopeful either on the upside or on the downside because the stock has been such since I think Jan this year. It's throughout the year it has done nothing. It has oscillated with the psychological 200 as the support. But what catches my attention in this move that we have here, over the last 1, 2, 3, 4, 5 days can play out interestingly on the upside. We have a little bit of crossover. 3 days bounce back takes the index close to that 212.13 kind of level. Consolidates further today with a spinning top, sign of range contraction, and a move above yesterday's high, which is close to that 213 mark, is definitely going to lead to a breakout. This breakout will be clearer if you take a look at the 75-minute time frame, and the 75-minute time frame will offer you some kind of a continuation pattern. It will look like a symmetrical triangle, a pennant kind of a behavior. If you allow me, I can quickly draw this. And so yeah, symmetrical triangle, ascending triangle, a triangular kind of a behavior within the price. The stock is a big disappointment when it comes to continuation of trend, either on the upside or on the downside. The stock has a very good reputation to disappoint. So even if we get a breakout above 213, we should be expecting little above 217, 18 range, maybe not more than that, because such has been the behavior of ITC of late. But overall, as I was saying yesterday, that there will be no dearth of opportunities. It's going to be a stock specific market. We saw that how the cements have moved, the real estates have bounced back, banking, few selected banks have also done good, financial services. So I would suggest that the relatively weaker sector like auto, we can be a little bit careful, but the others which have shown strength and picked up momentum, I think for a trader's perspective, there will be further opportunities. Stick your bias on the long side, even if the markets come off for a day or two going forward. Try not to participate on the downside. Just utilize that as an opportunity to buy on a dip. All right. So let's see how we close tomorrow. We are already up 3.16% this week, and tomorrow's close will mark the end to a pretty strong weekly close for the markets. Till then, trade well, trade well.